I hope you're enjoying your weekend between celebrating tax filings and the Easter holiday. As we move into Q2 of 2025, we want to share a few key market updates and insights and an optimistic look at what we're targeting as our next investment. Tax season is a wrap. All investor K1s were distributed just before the April 15th deadline. Thank you again for all your patience as we got those received, distributed, and processed from all the various operators. Whether you've filed or you've extended, we hope it's smooth sailing from here on out. Now, to try to anticipate what the 2025 tax environment might look like, I'm going to also recommend that we all monitor the Hall CPA tracking updates. I'll provide a link in the email for the latest updates on the prospective renewal of the Tax Cuts and Jobs Act, which addresses relevant issues such as real estate, bonus depreciation, corporate tax rates, tariffs, etc. It's now time to shift our focus towards the next wave of opportunities. Here's a market snapshot. It's been a year of reset with growth ahead. As real estate investors, we've all felt the recent impacts of a historic 11 rate hikes by the Fed, which began in March of 2022. Floating debt stress and expiring rate caps, low rent growth and inflationary property expenses causing reductions, even temporary pauses in some cases. Despite all of that, there's still plenty of reasons for optimism. The tide is turning, which brings with it opportunities for investment. Despite some lower cash flow distributions and extended exits of some of our projects, I want you to remember our preferred returns continue to accrue, even if they aren't distributed. So for LPs or limited partners, preferred returns and return of capital continue to take priority over the GP, the general partner, participating in that upside. The majority of new construction supply has largely been absorbed, with new construction starts coming to an abrupt halt. In fact, we've already experienced some modest rent growth, signaling a rebound with increases expected in Q3 and Q4 of 2025. So why are private alts still a win? We invest in private alternatives for a reason, and it's more relevant now than it ever has been. And here are three tangible reasons. One, target returns. Over the investment term, we're still targeting between 1.7 and 2x equity multiples, about mid-teens, like a 15 to 17% average IRR, and about 8% on average of cash on cash over the term. These performance metrics are still unparalleled in other investment classes. This is the pathway to doubling capital every 5 years approximately. And when combined with capital reinvestment and tax-advantaged income, that is the recipe for long-term wealth building. Number two, remember the acronym IDEAL, which highlights all the unique qualities of investing in private commercial real estate. That includes income, depreciation, equity, appreciation, and leverage. Number three, diversification. Diversifying across traditional investments such as stocks, bonds, and mutual funds, as well as alternatives of commercial real estate and private credit. We're diversifying across operators, asset classes, geographies, and risk profiles, all with a low correlation to each other and the public markets. It's not just us as retail investors who are investing in private alternatives. The largest asset managers and hedge fund managers are making the same big moves into this space. Take a look at this article that I put in the email recommending a portfolio distribution of 50-30-20. That's distinguished from their typical 60-40. And that's with 20% being emphasized to invest in private alternative asset. This segues perfectly to introducing our next big investment opportunity, and that's Private Alt Fund 4. Previous syndications that we've all been involved in have either been in a single property, a portfolio of similar properties, and most recently with past iterations emphasizing income or growth, or both income and growth. In this market with volatility and uncertainty everywhere, to meet our own personal objectives, we must still continue to invest, but the focus must be on risk mitigation and preservation of capital. And that's why this next fund is being curated and scaled specifically to prioritize income, growth, and diversification across lowly correlated assets. So then no matter what happens economically, socially, politically, locally, statewide, nationwide, globally, these assets will serve to stabilize and offset each other, leveling out the volatility and risk. Launching next week, we're proud to partner again with SMK Capital on our largest diversified private real estate and alternatives fund. Built on the success of Alt Fund 3, which included a diverse set of 30 properties spread across multiple sponsors, geographies, and asset classes, such as multifamily value add, and sometimes with additional tax abatements, or manufactured housing, some self-storage, some private credit, and other private performing alternative assets. The new Alt Fund 4 will feature exclusive access to funds that typically require in excess of $250,000 investor minimums. We can do this because of the scale and aggregated capital of our fund. Everyday retail investors like you and I are able to participate in these opportunities and negotiate better economics. Another feature is these assets are cash flowing day one, with multiple assets already having been acquired and are performing with positive cash flow. As always, this fund will continue to prioritize relationship-based investments with repeat operators. We talk and meet with them regularly on asset management calls, on-site due diligence, at conferences. We prefer to have personal relationships with the executives and founders of each of these operators. While there will be dozens of assets in the fund, we will still only have a single K1 and one investment portal. And finally, the fund will target a 5 to 7 year term with the same competitive returns, 15 to 17% IRR, 1.7 to 2x equity multiple, and about 8% plus cash on cash. Again, diversification is paramount to withstanding market volatility, political and global uncertainties. Stay tuned and stay connected. We are committed to helping you build long-term wealth with clarity and transparency. As always, I'm aligned as an investor first, leveraging my diverse professional real estate experience to capitalize on syndicating our collective capital for a competitive advantage in investing. You can always visit my website at investwithfranklin.com, or you can learn more at my YouTube channel or follow me on LinkedIn. More information about this new Alt Fund 4 will be circulated next week. Enjoy your Easter Sunday.